So what in the world happens when a massive tech company starts to fall apart, but the stock market just keeps on climbing? Well, today we are going to solve the 7,000-point mystery in the S&P 500 futures.
I mean, really think about this. This is the central puzzle of the day. You've got a huge household name tech company getting absolutely hammered, but the market, it's not just shrugging it off, it's actually going up. So, what gives?
And this slide lays it out perfectly. I mean, look at the contrast here. On one side, you've got Intel just collapsing, down almost 6%. But on the other, the S&P 500 futures are in the green. And more importantly, they're taking back this really critical psychological level. This is the mystery we're here to solve.
So, let's start our investigation right there. Let's talk about the magic of that big, round number.
7,000. It's not just some random number on a chart. In the world of trading, these big, round numbers are like psychological lines in the sand. They're battlegrounds. So for the bulls to push past it and hold that line, well, that's a major statement. It's critical.
Now, to really understand why the market is feeling so tough right now, we got to zoom out a bit. We need to look for clues in the bigger economic picture. Let's see what the macro environment is telling us.
And right away, something really strange jumps out. We're seeing this weird divergence. Gold, the classic place people run to when they're scared, is soaring. Normally, that's a massive red flag for stocks. But today, they're both rising. This decoupling, as they call it, tells you there's some other powerful force pushing stocks up, and it's completely ignoring the usual fear signals.
So what about the bond market? What's its verdict? Well, it's flashing a big, bright green light. The 10-year Treasury yield is totally stable. And what that means is there's no pressure coming from rising interest rates. That gives stocks plenty of breathing room to run higher. Okay, so we've got the macro picture. Now let's pull out the magnifying glass and follow the technical footprints. We're going to see what the big institutional players, the smart money, are actually doing with their cash. And the charts are telling us a fantastic story. The technical indicators are showing that the big institutions were buying like crazy during yesterday's dip. They were scooping up shares, especially down in that 6,940 zone. So get this, while a lot of people were panicking about Intel, the big dogs were using that fear as a buying opportunity to load up.
All right, so we know what the big money is up to. But what about the overall vibe of the market? Let's take its temperature and look at some of the key sentiment indicators.
This number right here, this is the VIX. It's often called the market's fear gauge, and the fact that it's just sitting there at 18, well below that key level of 20, that is incredibly important. It's basically telling us that even with scary headlines flying around, that deep systemic fear, it's just evaporating. And that, my friends, is a very bullish sign.
Now, the options market gives us even more insight. It's kind of created these invisible walls. Think of it like this. There's a massive ceiling of resistance up at 7,050. That's the call wall, where lots of bets are placed that the market will stall. But, and this is the important part, there's a really strong floor of support down at 6,950. That's the put wall. This basically creates a very clear playing field, with a super solid foundation for the bulls to stand on. Okay, we've looked at the macro clues, we've followed the institutional footprints, and we've gauged the market's mood. It is time to put all the pieces together. Here's the verdict on our mystery, and a playbook for what could happen next. So the solution to the mystery is this. The market is blowing off the bad news from Intel because two much more powerful forces are in control. First, the institutions are aggressively buying this dip. And second, money is rotating out of weaker stocks and piling into market giants like Apple. Apple is acting like a safe harbor within the tech sector, and it's so big, it's basically stabilizing the entire index.
So, how can you play this? Well, here's one potential idea, the 7K defense. The logic is really simple. Now that we're over that key 7,000 level, you can bet that the automatic trading programs, the algos, are going to defend it. So the play would be to look for a chance to buy if the market dips back to test that 7,000 zone with a pretty clear target and a nice, tight stop loss.
All right, playbook number 2 is a little more advanced. We're calling it the gold divergence. Remember that weird thing we saw earlier where gold and stocks were both rallying at the same time? Well, the logic here is that if that rally in gold starts to fizzle out, all that safe haven money is going to come rushing back into stocks, potentially fueling a big breakout to the upside.
So when you put all this data together, what's the most likely path forward from here? Well, the forecast is pointing to about a 60% chance that the market just keeps grinding higher. With fear this low and the big institutions buying, the path of least resistance really seems to be up, especially as traders get positioned for that big Fed meeting coming up.
And all of that brings us to the final and most crucial takeaway. If you remember just one thing from this whole explainer, please make it this: trust the 7,000 handle. As long as the S&P 500 futures can stay above this critical line, all the data suggests that the bulls are firmly in control of the trend for now.